Hey everyone, it's Luron here and welcome back to my channel. Guys, in today's video I'll be looking at AMC. Yes, your favorite meme stock. And the reason I'm looking at this one, guys, is because on Friday we had a hammer close, meaning the stock closed with a hammer candlestick pattern. And that's an indication that this stock is not yet over with the short squeeze. I know this stock has been short squeezing since back in January of this year and also in May of this year. And the stock is right now set up in a nice wedge formation, a nice pennant formation actually. And the stock, in my opinion, is actually ready to break out again and give us another short squeeze. I know the short float right now is just under 20%, which is not that high. But that's, it's still possible that that short float can increase and the stock can see another squeeze in another week or two. Now, I've already taken a position in this stock last Friday. So I'll show you guys my entry, my potential exit, and I'll show you guys my risk level, meaning if the stock should break below a certain level, where I'm looking to get out. So if you're interested in trading stocks or options, guys, you certainly don't want to miss this video. And remember, if you're new to the channel, remember to subscribe, smash that like button so we can help with the algorithm, help the channel to grow. So without further ado, guys, let's jump right into it, where I get into the charts, I show you guys the technical analysis, and we'll see exactly what are the key levels to pay attention to in the coming week. So let's welcome back, guys. So let's jump right into it, guys. I'll try to make this video as short as possible so we can get straight to the point. I can show you guys exactly what's going on with this stock. So AMC, as you guys know, as I mentioned before, back in January of this year, AMC went up 732%, and that's where we have the first short squeeze. We consolidated here. We formed nice wedge again, and we broke out back in May, as you can see here, mid to late May. We went up another 600%, guys. That's ridiculous. Now 600% in a very short period of time. Let's see, we had 20 days, we went up 600%. Now the stock is doing a similar form a similar pattern. So right here we had a wedge, which was longer. Now we have a wedge here, which is much shorter. This one is the duration of this wedge is about 42 days, and the previous one that we had was 104 days. But this one is much more aggressive, as you can see here on Friday. That's what in my intro. On the 2nd of July, which was last Friday, the stock closed with a hammer candlestick pattern. Now, as you guys know, a hammer candlestick is usually a bullish indication. It's a bullish reversal pattern. So the stock was falling here, broke this key level. As you can see here, we had 1-2 point, which created the bottom or the support line in this pennant formation. And for 1 minute, I thought we would have just washed out and failed altogether if we had closed below this line. But as you can see here, the stock just went right back up and closed with a hammer. Now it's not a green hammer, it's a red hammer, but still it's a bullish candlestick. So with that said, you want to pay attention to this one as the market reopens next week on the 6th. I think Monday is a holiday in the US. So look out for this one opening on the 6th, which is Tuesday. And once you open inside here, it's a good time to start your position. A lot of people like to wait for the stock to move higher before they enter, but that's not my trading strategy. My trading strategy is enter to the bottom at the support level. If the stock breaks and closes below that level, that's your risk. And you're risking a smaller amount, because if it breaks there, you're close to the support line. And if it breaks and closes, you get out because it's failing. But if you enter here, then guess what? Your risk is all the way down here, 14%. And then your upside is, becomes smaller. So that's where, like I said, I took a position already on this one on Friday, just before the close. My targets are at 65 and also at all-time highs of 72. My position that I took, their options, I took the 65 strike for July 9th. And I also went for July 16th up at 71. So if you guys are looking to take that trade, whether it's option, whether it's stock, you certainly want to get into, right at the open. That's my that would be my recommendation on this one. At least that's what I've done, and I plan to add some more to this Tuesday morning at the open. Once we open within the line, I plan to add to my current position. So that's the technical analysis on this one. We have a nice look, 1 here, 2, 3 connection on the resistance line. On the support line, we have 3 connection now, 1, 2, and then the hammer candlestick from last Friday. So that's the technical analysis on this one. It's a nice pennant formation, which is a bullish pattern. And the upside, like I said, back to that all-time high up at 72. It's a 41%, even if you're trading stocks. But I'm trading the option in this one. And I already took an entry, a small position on Friday. And I plan to, once it open inside the wedge on Tuesday, I plan to add my full size and ride this one up. It will be moving aggressively higher, guys. The volume, we can expect the volume to pick up. The volume has been a little, it's been declining lately, but that's how this pattern works. You get a decline in volume, it squeezes, and then boom, once you get out here, shorts will be looking to cover like crazy, hence short squeeze. And then that can push the stock up to maybe all-time highs again. Or even new highs possibly as this one squeezes higher. So that's my analysis for AMC, guys, your favorite meme stock. Remember, if I earn your thumbs up, if I provided good content and great quality in this video, guys, I look forward to your thumbs up. Smash that like button, and if you're new to the channel, please remember to subscribe. So until next time, guys, have a good one. Have a great weekend.